Guys, today we're going to be talking about whether this is your year, meaning 2025, the year that it's time for you to purchase a house. There's a lot of opinion out there. Everybody's got a different opinion. Some people say yes, other people say absolutely not. Let's wait. But Mark and I thought today we would dive into the facts and let you kind of look and see what the landscape potentially is going to look like and ultimately make that decision for yourself. So let's get into the first topic, Mark, and I think this is one that everybody is kind of wanting to know. What are valuations of homes going to do in 2025? Are they going to increase? Are they going to stay the same? Or are they going to decrease? And really, you were showing me earlier some interesting statistics that you found off of a couple of websites that you subscribe to. So what are you seeing as far as, where home prices could be at the end of 25?
Well, and let's preface this a little bit with, traditionally the argument is you should buy right now, because if you don't buy now, houses will be so much more expensive in the future because they're going to increase in value 5% or 7% or whatever the number is, or 10%. I think you mentioned at one point.
Yeah.
Didn't you? That, one group was saying 10%. And if you look at the numbers, even in the article I was reading earlier, different groups have different numbers, anywhere from 0.5%, price appreciation in 2025, all the way to like 4.9% appreciation. But the average seems to be about 3.5%, which is less than in the past. And if you think about like 2020, we saw 20% appreciation, of homes. It's nothing like that. And back then it was a frenzy, which is kind of what everybody's been thinking is it's, because the values are going up, the values will go up because the buying activity is so much, and it's a supply and demand thing.
Right.
We don't necessarily see that in 2025 anymore. And that's changed over the last month, or so because of a lot of different factors. But what are you seeing? What do you think?
Yeah, so I think somewhere in the range of 3 is probably where we're going to see home appreciations. When you look at what is Zillow saying, what is NAR saying, the National Association of Realtors, how about Fannie Mae and Freddie Mac? We have to factor in their opinions, and quite honestly, they seem to be pretty off on their opinions. I think it's Freddie saying there's going to be a 0.6% increase, and Fannie saying there's going to be close to a 3% increase. So it's funny to see that those two are not aligned in their projections for 2025. But the important thing for me is that you're not seeing any outliers that are saying something crazy like what you mentioned earlier. We're going to see an 8 or a 10% increase this year. So,
well, and just as a thought, you were telling me earlier that you went to a conference.
Yes.
And when was that?
That was back in October.
So in October, you went to a conference, a Zillow conference.
Yep.
And they were thinking what home appreciation percentage?
Yeah, well, so they were talking about that specifically in total home sales.
Okay.
And they thought that the total home sales might see a 10% increase, which I think that might be a little bit aggressive as well.
Yeah.
I mean, obviously, as a realtor, I would love to see a 10% increase in home sales from 2024, but it's important to note that 2024 was the lowest volume per capita home sale year as far as volume is concerned since 1995, I think it was.
Yeah.
So, any increase is going to be felt by the market. And I think when you look at where home prices are going to go, you have to factor in that we talk about this all the time. People are sitting on the fence waiting for interest rates to come back down. But now we're entering 2025, and 2020 and 2021 are starting to look further and further back in the rearview mirror. And people are saying, you know what, rates might not go back to 2.5%. They might not go back to 3%, maybe ever, So am I going to just continue waiting my whole life and watching home values appreciate and not purchase? Or am I going to jump in the game here, and then when rates do come down, I'll refinance? And I wanted to ask you about that specifically because you said you saw at the end of 24 a huge uptick in mortgage rate applications. Is that right?
Right. Well, and you can watch, if you think about the buying process, you can watch from mortgage applications, which then leads to pending home sales, which of course then leads to closings.
Yes.
And as you look at that data, I mean, we're looking at it with mortgage applications. We're probably 3 months from closing.
Right.
On average.
Sure.
Because you take the application. Some people buy that month. Some people buy 6 months later. Some people buy 10 years later. You know,
Right.
you never know. But yes, so we have seen an uptick. And you've seen some pending home sales increase as well too, haven't you?
Yes, yeah, I have seen some pending increases. I think that the beginning part of 2025, as far as volume is concerned, is going to look strong, and that's why, to kind of cap out this point here about where prices are going to be in 2025. Seeing as the volume is expected to increase, inventory may ease a little bit, but not to the point where there's more sellers than buyers. So you're still going to have that pent up demand, and a lot of millennials that are now getting to be older millennials that still haven't
Right.
bought their first home that are looking to jump in the market. My prediction is that, the average of these forecasts are probably somewhere accurate, that we're going to see anywhere between, let's say, a 2.8 to 3.5% increase in home sales in 2025.
Right, right. And there's an interesting point that I was thinking about earlier. The last few years, November, December, especially December, has seen an increase in purchase volume.
Yes.
But that's also coincided in the last 2 years with a drop in rates.
Right.
Rates came down in December of 23. They came, or December of 22, December of 23. Rates came down a little bit, and you saw an increase in business. Not so much in December of 24.
Right.
They were in the mid 6, 7 range all November and December, and yet we still saw an increase, which tells me there's some pent up demand going there. That's what's
Yeah.
going on, and so, but I don't think we're going to see the mass influx of buyers out there to the point we thought we were.
Yeah, and I think that's probably what exactly will happen. We're going to see an uptick. We're not going to see mass pandemonium. We're going to see some inventory, increase with the new builders, and that'll be. We'll touch more on that kind of in the last section. But I want to talk about now the other caveat that a lot of people are waiting on, and you mentioned just briefly there, is the interest rates.
Interest rates, yes.
Before we started filming, you were showing me a chart that suggests that interest rates might not come down as much as originally anticipated in 2025. What are you seeing that makes you think that?
Well, so here's kind of one of the things that happen, and if you follow the Federal Reserve and you follow, the announcements that come out after the Fed meeting,
Yeah.
usually there's the announcement of what the decision is. Are we raising? Are we lowering? Are we staying the same on federal funds rate? And then, after that is comments, the commentary of what happened, the questions for the chairman, all of that. And those can have two different effects.
Right.
So, this last time, did we cut? Okay, we cut, but we're not seeing a huge increase in volume. We're not seeing the rates come down, and the reason why is because the outlook changed.
Right.
One of the things that accompanies we call it the dot plot, and it's literally a bunch of dots on a page, and so
Super exciting.
super exciting stuff, right? But the Fed presidents around the country, they will decide, okay, where do I think the federal funds rate will be in 25, in 26, in 27? And that shifted. And so what happened is, whereas we were expecting a 100 basis point or 1% decrease in the federal funds rate, so from 4.25 to 3.25 for the federal funds rate, which is not mortgage rates,
Right.
but anyway, it would correlate that we would see that. Now it's looking more like a half.
Right.
So
For all
literally
of 2025.
cut it by 50% what we're expecting the rate drop to be on the federal funds side. And so, we're looking at that going, well, geez, I would think rates, last year were between 5.75 and 7.25,
Right.
or 7.5 in some cases. I think we're going to end up right where we were.
Yeah.
We're not going to see, people want a 2% or 2.5% decrease in rates. And the economy would have to, totally crash.
Yeah.
We'd have to have another world pandemic combined with a bunch of other factors that played into that too, for that to happen again.
Yeah, and that would be something that we probably all would not want. It would be great to have
Right.
a mortgage rate at 2%, another global pandemic, probably not so
Yeah.
much.
We'd have more problems than, just where do I buy a house?
Exactly. So that half a point cut, would that reflect 2 Fed meetings where they cut rates 25 basis points? Is that what you're thinking? Or?
Well, yeah, and so, the next Fed meeting is at the end of January.
Yeah.
Pretty much they're thinking there's an 88% chance that we will not cut at all in
Yeah.
January. And so, farther out in the year, yeah, sure, but this meeting, no.
So we're probably looking like mid-year before they start to cut rates again.
And part of what's driving that is right now mostly the job market, because what's happening is, it's a delicate balance. We want to lower the federal funds rate so much that businesses invest and they hire and they expand and they do all that, so that the economy, spends. But we also don't want inflation out of control.
Right.
And then if we're slow to lower those rates, we don't want unemployment to get out of control either.
No.
And so, but what's happening is the unemployment numbers are not showing what they want them to. In other words, less people are unemployed. That seems like a good thing, right?
Right.
Except it's not if you're trying to slow down the economy.
Exactly.
Because then, people have jobs, they buy things. Inflation goes up.
Right.
That's kind of how the market works in the free market world. So, it's not happening as fast as they thought it would.
Yeah, and so essentially the thinking on that is if people are being hired and the job market is doing well, there's no need to cut rates at this current moment because the economy is moving as it should. Whereas if all of a sudden there's mass unemployment and all of that sort of stuff, then it's like, okay, maybe we turn the dial a little too far. We need to start turning it back. Do I have that right?
Something like that. I mean, but part of the problem is inflation got out of control. We were 9% at one point.
Yeah, it was high.
It was ridiculous. And so now as we work our way towards that 2% target we've been hearing about for 3 years now, 2.5 years at least.
Yeah.
That 2% inflation target, we're not there, number one, but we're never going to get there with that many people employed right now.
Right.
You've got to see a slowdown of the economy. If people are working, you're not seeing a slowdown of that economy and a lot of other factors. And so we actually want a slowdown in the economy so that then the Federal Reserve looks at it and goes, okay, now things are truly slowing down. Especially in construction segments and things like that, which all relates to what?
Housing.
Bingo, exactly. And so, and things are slowing down. We're seeing, inventory, for example, with new builds. We were just talking about that. Like builders can only operate at these thin margins or negative margins for so long.
Yeah, that's very true.
And especially when their inventory is building.
Right.
And we've seen that in the last quarter.
It's a lot. And that's the final topic I want to touch on. But just to put an end cap on the mortgage rates, you think that we're looking at somewhere between 5.75 anywhere up to 7 throughout 2025, essentially.
Yeah.
So essentially no change.
And you and I have talked about this before, that we feel in general, and we being me and the people I work with, and also, a lot of the people much smarter than I.
Yeah.
Which is a large group of people. I mean, even if it's just me and the dog, I'm not the smartest guy in the room. So, but we do think that 6%, as they at least head towards 6%, we will see an increase in applications pending home sales, but it's not going to be an increase enough.
Yeah.
To make it to a point where it's a buyer's market again, or a seller's market again.
Right, where you're getting 5-6 offers on every house that gets listed.
Or 25.
Yeah, exactly. In some cases, yeah. So so that's the first two parts of this conversation. One, where is housing going to be as far as appreciation? We're looking somewhere in the high 2s to mid 3s% increase. So that's a good thing.
Yep.
Mortgage rates maybe not where you hope that they'd be, but again, you're not in a massive buying frenzy, so you have the ability to negotiate a little bit better with sellers. It's not a seller's market, as you pointed out, and you're probably not competing against 24 other people, and you're the 25th offer that they've received, and they're all over asking price. So things to factor in. And then the final thing And I wanted to add this into our conversation
Yeah.
because I think it's really interesting what's going on with new home construction building right now. They're trying to fill the inventory disparity, and they're trying to do it fast. And I'm wondering if they're overshooting a little bit and they're going to be sitting on a lot of inventory. And I'll tell you, just last weekend, I was with a mutual client of ours at a new construction here in League City. It was a new build. I won't say who the builder is, but they had a home there that we looked at that they had discounted $100,000 less than their original asking price.
Yeah.
And this is a brand new home, and it's not even completely done yet. So it's reaching completion, but it's not there yet, and they're already discounting it by $100K. For the homes that qualify for their lender incentives, they're offering crazy stuff like 3.99% interest rate, and they'll pay your closing costs. You as a lender, I'm sure you can, shed some light on the fact of how bad you would have to take a bath on, a deal like that as a lender.
Yeah.
So speak a little bit about your thoughts as somebody who, I guess competes against in some ways with lenders for new construction. What are you seeing with as far as them bending over backwards to try to get people in houses? And what do you think that means for inventory in 25?
So the first thing you need to understand about a builder is they're not the March of Dimes.
Not the March of Dimes.
It's all about the numbers. It's all about money. How much can we eke out of that house between lending and construction? Because we've got two sides of the business here to make it happen.
Right.
So we can make more money on the house and lose money on the mortgage. So now if you're me, I am a retail mortgage lender. I work for a company that has 25 something investors that we sell loans to. And, that's great. But you know what we do? We do mortgages.
Right.
And we only do mortgages.
Right.
We don't have a construction company to make money on to subsidize the losses on the mortgage side,
Right.
as the builders do. Now, what's happening though is, yes, they have overbuilt, because now, and it's something like, I don't know, a couple 100,000 homes nationwide that they've overbuilt. They have this inventory now that's sitting.
Yeah.
And it's trouble for them because now they got to drop the price. The builders can only operate in the negative margin for so long, right? I mean, can't lose money forever. Eventually, you'll be out of business.
Right. Exactly.
And so that doesn't math, as
Right.
as the kids say, that doesn't math, long term. And eventually, they got to do something. You have to relax on the rate thing or the incentive thing, or they're going to have to figure out how to make money building houses. If they're not building houses, they're not making money.
Exactly.
The machine can't just stop all of a sudden, and so they have to keep building. Otherwise,
It all comes to a screeching halt.
yeah.
But if they're building and not moving the inventory that they're building, I had a closing at the end of the year. I think you actually looked at this file for me. The builder basically was begging the client to close before the end of 24. I think they gave him something like $10,000 extra towards their closing just to do the closing in 24 because they wanted that house off the books. And then that situation, and then touring last weekend and seeing homes discounted, $100,000 with interest rates being offered in the threes. Like you said, that these builders are taking a bath on these loans just to move houses, and they're substantially decreasing the prices of the houses as well. And I think the builders actually could play a big factor in why home prices don't appreciate at a crazy rate in 25. We said somewhere in the high 2s to mid 3s, because I'm worried about the comps.
Yeah.
If a builder slashes the price of a house by $100,000 just to move it, well, that's now a comp. And if you're buying a house, that's factored in by an appraiser, when they go and do their appraisal on the home. And so I think that the builders can actually negatively affect prices there, which is going to cause it not prices to go down, but to not go up as fast as we had thought. And so, that's another thing to consider as well. New construction is notoriously, the taxes are going to be higher,
right?
Because you're going to, the mud tax here in Texas, and they have various other things in different states. Insurance is probably going to be a touch lower because it's a brand new house. The builder's going to upcharge you on a lot of things and say they're giving you discounts, but you're really going to be, charged a premium for that.
Most expensive wood floor you'll ever see.
Exactly.
But
if you're looking for that 3% interest rate, maybe you get it from the builder. Who knows? So, I think that builders overcompensating for the inventory, because this conversation's about a buyer. And is it a good time for the buyer to buy in 25? So I want to kind of bring the conversation back to that. I believe that these builders bending over backwards and competing with each other and offering these ridiculous interest rates and slashing prices will help the buyers ultimately because they have freedom of choice. You don't have to go with a D.R. Horton or with a Lennar or with a Meritage Homes. Let the three of them compete. That's capitalism, right? Let them compete. See who's giving you the best deal if new construction is the route you want to go down. And that's a topic for a completely separate video.
We need to do that, actually. I think that's an interesting topic we need to talk about some. Not today, but, in the future, is new versus old, or new versus existing, as it's called. Existing home sales versus new builds. And to watch the numbers, the new builds have increased. 24, 23 were great years for the builders. But it's all kind of slowing down now. And as you can see, they're dropping the price $100,000.
For a home that's not even done yet.
And they're buying your interest rate down to 3.9 or whatever, or they're doing kind of a stair-step, temporary buy-down program. And all of that plays into those factors. But what we see is still we're not seeing, increase in values on homes when the builders are cutting price by $100,000.
Exactly.
And, which also plays into the same that we talked about earlier, that increase in value might be 3.5%, somewhere in that neighborhood. And that's part of why overall in the market.
And I think, so let's kind of recap, I think it's a good time to buy in 2025 for a couple of reasons. We already said that home prices are going to go up probably 2.8 to 3.5%, depending on whose numbers you're looking at and who you trust. So if you buy now, or midway through the year, you're going to see some equity appreciation in your home. Not a crazy amount, not to the point where it's causing a buying frenzy to where you'll have to overpay. Yes, interest rates are probably going to hover around where they are now, but that means it's still not going to flip back to a seller's market. So that gives you flexibility as the buyer. Almost every single deal I'm doing right now, I'm getting, a sizable seller's contribution to the buyer, $9,000, $10,000, $12,000 from the seller to the buyer at closing. That covers most of their closing costs because sellers right now, they're lingering on the market a little longer. They need to move their homes, and that's a real perk. And then the new builds is the final piece of the puzzle, if that's what you want. And some people, they just want that brand new home. They can go to the design center and they can build it out. Well, if that was ever going to be cheaper than it normally is, now's probably the time because they're sitting on a lot of inventory. So if new builds is your jam, there's probably some good deals to be had there. But I want to get your thoughts because overall, I think 25 could be a great time to buy, especially if you're a millennial like me. You're getting a little bit older and you want to buy your first house. I think now's the time.
It's time to move off of mom's couch. And
Definitely.
No, I'm kidding. That's but I try to simplify things as much as possible for folks because they don't teach this in school and in college and high school. But basically what's happening is our battle cry has been buy it now before the feeding frenzy comes, before the market is appreciating 10 or 15% a year. So that house, because you got to buy it now, because that house a year from now is going to be worth 10% more, or it's going to cost you 15% more to buy a year from now.
Right.
And in that meantime, you're not building equity, because if you buy it now, you start paying on that mortgage now, and you're a year ahead if you buy it now rather than a year from now, right? And so that's been kind of our battle cry. Things have shifted a little bit, and what makes 25 a good year to buy is because, the appreciation is not going to be as much. we're not going to see and that's because we're not going to see the demand that we once thought we were going to see. We don't feel like rates are going to drop. At one point we thought maybe low fives. That's not looking like that's what's going to happen. We're not going to see a massive drop in interest rates overnight, which never happens anyway, because rates take the elevator up and the stairs down.
Yep.
And so, we're not going to see an overnight drop of 2% all of a sudden. It just doesn't happen. And we're not even going to see a 1% probably over a year. We might see half.
Yeah.
And so because of that, it's kind of slowed some of that stuff down. Now, what's going to happen in 26? That's a good question. We don't know the answer to that, but we do know that as time goes on, yes, more buyers will come out and more. And what's going on too is, like you say, 6%. Oh my gosh, it was 2% a couple of years ago, and all your friends are telling you stories about how they bought at 2 or 3% or whatever. And you don't want to be the guy buying at 6 because that's not cool at a party, right? But as time goes on here, 6 is kind of the new normal.
Well, what your friend also didn't tell you was that he paid $40,000 more for the house than he should have to get that 2% rate.
There is that.
And you got that 6%, and you also got the home for under asking price.
So 2025, you're going to get a better deal because the market's not picked up like everybody thought it would. You're going to get more in seller contributions and spiffs and, be able to negotiate more with the seller and ultimately get them to take a lower bottom line. And rates, they're not 8%, they're not 4, but they're also not 8. And, everybody talks about the 80s, 18% or whatever. I'm like, okay, well, what? Yeah, I get that was so much higher, but reality is that the average rate on the house over the last 30 years is something like 7-something%.
Right. And also back when the rates were 18 or 13, 15%, the average home price comparative to the average annual salary was what, 2x, 2.5x, and now, it's 4 or 5x. So obviously an 18% rate would pretty much price dang near everybody out of the market.
Right.
So that's not realistic. And that's one thing that as a millennial who bought my first home a couple of years ago, I always take offense to when the older generation's like, well, we bought in 18% rates and you guys are complaining about 6. It's like, well, yes and no. You bought it in 18% rate when the home was $45,000 and you made $22,000 a year. It was a little bit of a different situation.
Things were a bit different. Insurance was a lot less.
Exactly.
Taxes were a lot less, back then. And so, but as time has gone on, it's an affordability, issue. If you can qualify to buy a house in 2025, go do it.
Yeah.
And if you think about it, it's kind of only getting better because if rates do come down in 26 or even in the late part of 25, you can always refinance that thing.
Exactly.
And so then it's only getting cheaper. Yeah. It's only getting cheaper if the rates go down. So
exactly.
Anyway.
So
that's what my thought is.
I think that's a brilliant place to leave it. If you can afford it and it's not going to strain you completely financially, you've got a decent down payment, you're ready to make that move, your credit's in a good place, and you can feasibly make your house payment and not be eating ramen noodles every day just to do so. I think 2025 is going to be an excellent time to buy.
Right. Absolutely.
Cool. Guys, thanks so much for watching this episode of Two Guys Talking Houses. I'm Stephen Barnhill.
And I'm Marc Elliot.
And guys, if you're looking to go down the road of home ownership, if you're looking to get advice from a real estate perspective, I'm happy to help you. If you're looking for information as far as applying for a mortgage and getting pre-approved in that regard, Marc is certainly available. We're in Texas, we're in Houston, but we have a great referral network across the country. Shoot us a message, drop a comment on this video, and we will see you in the next one. Thank you so much.